All right, guys, welcome to the 360 Trader Elite course. Man, do we got a lot planned for y'all. Welcome to class 1. So excited to be bringing this to you guys. I'm so pumped. I'm so motivated. I'm so hyped. Why? Because this is the real deal. This is the real deal. And you guys are in it to win it, and you refuse to lose. All right, let's get going. So, as you know, I do have free material out there on Twitter, on YouTube, and such. I do some free training over there. This is much more intense, much more involved. This training that you guys are going to be receiving through this online course. Plus, it gives details as to my trading strategy, how I do it, how I pick them, how I find them, what setups I like, how I enter, how I exit. I mean, it's literally teaching you guys how to do this, and it's fantastic. I'm thrilled that you guys have decided to join in this venture. Welcome to the 360 Trader Elite course. This is course 1. We're going to get, hopefully by now, you guys have all established a free TradingView account. If not, and you have a similar type of setup, it shouldn't be too difficult to do the same things I'm doing here. If you're using a different chart platform, I'm not telling you you have to use TradingView. However, for the purpose of this course and to keep everyone on the same page, my recommendation is to go ahead and set up that free, you don't have to pay for it, TradingView platform at the very end. You know, if you want to upgrade, I think I have the premium. You can do so. I'll give you a link for that because it does give you some advantages. However, for now and to do what we need to do, just get the free TradingView, and then it'll be easier to follow because we're going to start there right now. So let me open up real quick TradingView. We're going to start from the beginning. Some of you that have seen my free training have already seen this, but I went really quickly. I want to keep this a little bit more involved and intense, taking you from square zero, from ground A all the way to ground Z, from A to Z, so that you guys are efficient traders and not making stupid mistakes. So we've gone to TradingView, the main page right there. All you got to do, I usually just start by clicking in what I'm looking for. For this point, I'm gonna do Bitcoin USD. So you'll see everything that's doing Bitcoin USD. The exchanges will be listed over here on the right. So you can decide, you know, for that pairing, Bitcoin USD, this is where the pairings are. You can decide what exchange you want to look at based on where you're trading or where your market is. For this case, I'm just gonna pick Coinbase. We're gonna let that load. And then just click on full feature chart down here. Full feature chart, and that gets you right where you want to go. That's down and dirty, quick and easy. As we go through, you don't have to look at what's here. I've been messing around. I've got these on. The reason why this is doubled up is because it's for different time frames, so they can be seen on different time frames. But anyway, so that pulls up my TradingView chart, and then of course you can have tabs across the top. As you see, I have multiple tabs. There's also a way to save things to your watch list. We'll get into that later. Right now, but for the purpose of this, I'm just going to give you the basics of how to maneuver through here so that you are efficient at doing it. And during the course, I'll continue to add more and more things from TradingView. So we're not going to just cram TradingView down your throat and expect you to remember it. I'm going to show you just small portions right now. So very important at the top left right here, that's your pair. That's what we typed in. You can change that right here. You can click on this, boom, and you can upgrade that right here and type in whatever you want and change this chart if you don't want to use a different tab. So your pairing is right here at the top. If you come to the right side, these are the prices. This is the price of that cryptocurrency, that stock, that commodity. They're listed right here on the right side. So that's the whole right side. Right side is price. The bottom is your time frame. So look at the bottom. You can see it's got months and years in there. You can see November to November 16th, December 14th. The reason for that is because as of right now, look back up here, this is your time frame. Okay, this is your time frame. So if you click on this, I can choose what time frame I'm looking at. I have this currently set to 1 day. which means every candle that's on here, each one of these candles represents the time frame of one day. Every candle represents one day. If I was to click this over to 1 hour, you can see the chart changes. Open this up a little bit, and now each candle is now 1 hour, and that's right here. So that's where you change your time frame. You're going to be doing this a lot. I use this all the time, so you definitely need to know where this is. Again, click on it. You can change, switch around. If you're, you guys are all in here to learn trading, but holders should never, never really go below the daily. That's this right here, the 1 day chart. There's zero reason for a holder to be looking at anything other than the daily, in my honest opinion. And then traders can go to the smaller time frames. But even with trading, listen. Unless you're a scalper, which we can talk about later, you want to stay away from this right here. You want to stay away from these. Why? Because they'll cause, unless you are an expert, they will cause you to panic, have FOMO, fear, because price moves very volatile in those short time frames. And a lot of times when you back out, when you zoom out, you realize, oh, it's really not doing a whole lot. It's really not as bad as I thought. If something looks bad on a small time frame, zoom out to the next higher up one. So if, let's say I was on, no reason for you to be on it, but let's say you're on the 5-minute time frame, it's like, oh crap, that looks bad. Well, back out to the hourly. Back out to that hourly time frame. Take a look at the hourly, and it's probably not going to look quite as bad. Now, if it looks bad on the hourly, you want to back out to that daily, which we had that happen just the other day. We had that little dip. Man, people were tweeting me, panicking, and sure enough, man, you back out to the daily, it was like a hiccup. It was like a little scratch. Like it barely looked like it had dipped at all. But people were panicking. Why? They're looking at the time frames they're looking at are wrong. And so it's very important, and as we go through here, that you listen to me when I tell you for these trades which time frame to use, okay? This is a vital part of the business. Otherwise, these small, tiny little time frames will freak you out. You're going to make the mistakes of jumping out too early or jumping out too late or getting in too early. Get all those type of mistakes that we want to avoid. So pay attention when I do talk about time frames, especially when it comes time to talk about trading strategy. All right, the only thing we're really going to use on here is the candles. That's this setting right here. I can change this to line. I mean, lines are great if you're having issues seeing trends. You shouldn't be. You can see trends with candlesticks, but if you're really having a hard time, you can open up the line chart and be like, ooh, look, line go up, trending up, okay? You can see it with candles. As you get better with candles, you're gonna be able to see it with the candles. I can still see that this is an uptrend. I can see that it's an uptrend within a bigger uptrend. I can see that without having to pull up the line chart. For our purposes, you will mostly be using this indicator right here, the candles right there. You don't have to go to hollow candles, hiking. We don't need any of that kind of good stuff. All right, I want to draw your attention to this label right here, because once you do this selection, it's going to tell you right here what it is in case you forget what exchange you're on. We picked, if you remember, the Bitcoin to US dollar, and we picked it on Coinbase. So that's why it's listed right here in case let's say you're actually on Binance, but you have the Coinbase chart up and you're like, hey, these prices don't match. Remember, these exchanges are not unified. They're not running off of one system like the stock market. So the prices are varying from exchange to exchange. That's why sometimes I put, hey, Bitcoin just hit 50K, and somebody's like, no, it's not. It's only 49.8. Well, they're looking at a different exchange. So that's why there are those differences. That's important to keep in mind in cryptocurrency. Maybe one day they'll all sing from the same sheet of music, but as of right now, that's just not the case. All right, good. So we've knocked out those basics right here. My pointer, notice I have crosshairs. Notice on the screen where I'm moving around here, that's crosshairs. I like that. That's my favorite. The reason why is because the crosshairs gives me access to instant data, and I'll show you in a minute. But right here is where you select that. In case you ever lose it, this is how you get it back. You just come up here and click it, because you start clicking on this stuff, and if you lose your crosshairs, you just come up here, get your crosshairs back, and you're good to go. With this, I can left click on the screen and move it left to right. Left click, I can move the screen left to right. I can move it up and down. I can just drag it. I can keep going, keep going, keep going. I can do all that kind of stuff just by left clicking, holding, and dragging it. Left click, hold it, and drag it. Now, I can expand this to make it larger, and all you got to do is do the same thing on price. So if I come to price, left click, and I go up, I can open this up. I mean, I can make these candles as long as I want or as short as I want, depending on what I want to see. And that's just left clicking, dragging, dragging, dragging. You guys get in here and play around with this. If you haven't already, play around with it. The more you play with it, the easier it's going to get for you. You're going to get used to it. And now on the bottom, from left to right, same thing. Left click. See how I can shorten that so I can see more time? Let's say I want to see more time on the same page. Now I'm all the way back to September. All the way back to September. Look at this. I can keep dragging that puppy. So I can open that up to see whatever it is I want to see. Remember, I'm on the daily, so every candle represents a day. So again, if you want to change your pointer, you can pick the dot. But I like the crosshairs because it lets me set that like a bullseye on where I want it and gives me the information a little bit better than anything else, I think. But that's up to you. You can pick dot, arrow. You got arrow. I mean, you can pick any of that. That's fine. But the other reason why I like it is because the crosshairs gives you those dotted, look at those small dash black lines. So it's easier for your eye to traverse to see what that's crossing with. So I'm going to bring it down to the bottom right so you can see. Note the crosshairs, no matter where it's at, it shows me the price and the date. Look at the bottom right. See the gray boxes there? I can see that where the crosshair is right here, the price would be 8566, and that would be the date set on 31 March if I put my crosshairs there. Now, this isn't trading there because the candles are over here. But if I set it on the candle, I can still cross-view that, cross-check that. It's also nice to put it up where I think stuff is going. For example, where the upper channel is. Let's look at the upper channel. I have this 2015 channel. If I put this marker right here, I can see that if Bitcoin was to hit this marker today, it would hit, look over to the right, to the price, all the way to the right, it would hit 58,027. And that would be today's date, 16 February. Why? Because the crosshairs tells you date and the price. Everybody see that? So that's how to use those crosshairs. Now I can look where there is no bar and look at projections and actually get that data very, very quickly. That's why I love the crosshairs. Love it, love it, love it. We're going to skip over this stuff right here, right now, because I want you to stay on track with the course. As we get and teach more things, I will add things. I'm trying to keep this as simple as possible so you're not feeling like you're a trial by fire and you're getting a fire hose stuffed down your mouth and you can't contain it, you can't understand it all. All right, so let's go over to here. I like this because it gives you full screen mode. Watch, bam. And it opens up your screen a little bit so you have more space, more room, and all that good stuff. Now, you don't have access to the tools over here, but that's a simple, all you gotta do is hit escape, boom, back out, get what you need, and then you can go back to full screen, full screen. There it is. So that's this tool right here. So on and so forth. Publish is where I actually submit my TradingView stuff to my actual TradingView account. For those of you that don't have it yet, you need to go to my Twitter profile. You need to look underneath there. You'll see my premium TradingView account where I do like to post charts. You need to keep an eye on that. You need to set alerts for that. So when I do post there, a lot of that stuff that's there is educational material that you can learn from because it gives me the ability to not only post the chart, but also talk about what I'm seeing and display different technical analysis there. And you can piece together a lot from that. You can learn from that. The more you look at it, the more you entertain these ideas, these topics, the more you're going to grow, the more you're going to learn. So if you're not a member of my TradingView, you don't have me on quick speed dial through TradingView, go ahead and get that set up as quickly as possible. And make sure you add me so you're following me there as well. Now you guys have the advantage of getting stuff that nobody gets. So that's going to make it even better and more prolific for you guys. All right, so we've talked about price here on the right, and we talked about the time frame on the bottom. So you can see when I switch to day to 1 minute, I mean, now I got to fix my time. I got to open this up so I can see the action. Move that back over. You just have to open this up when you switch in and out. You got to maneuver your chart so you can see the action. But look at the bottom. I pulled up the 1 minute charts. Look at the time down here. That's because each one of these candles. So here's 30 minutes worth of time. That means all of this between 1430 and 1500, there's 30 of these bad boys because it's 30 minutes. Each one of these represents a single minute of time. So look at this volatility. I mean, look at this volatility. Like this would freak somebody out. This would really freak somebody out on the 1 minute time chart. I mean, somebody right now is probably right about this point is going, what is going on? And really when you back out, you realize, well, it's just not that bad. So I just kind of wanted you guys to see what I'm talking about there by picking that. So let's go back to the day. Open up that, boom. Remember, you just drag, you just left click and drag and set the picture how you like it. So the reason why this looks so messy right here is because some of these lines were drawn on other time frames. So for example, these lines right here were probably drawn on the hourly, but look, I'm on the daily, so they look weird. They look weird. Now these lines right here, this resistance, which became support, and this trend line were drawn on the daily. Were drawn on the daily. But these little wacko ones were drawn on the hourly. So when you switch back and forth, if you see funny lines on there, it's because they're lines that you drew on a smaller or a larger time frame. So this 2015 upper channel that I have here, I drew on a much larger time frame. However, even if I zoom down to the hourly, that channel line is still going to appear. It's still going to appear. So that's very important for you guys to know, switching back and forth. All right, I think for today, for now, we're going to stop there and go ahead and move into our next topic. So when it comes to trading, when it comes to actually charting, man, I've done it. I've been there. I've made the mistakes. I've tried and experimented with 100 indicators. You name it, I've done it. And I've come to find out that simplicity works. Simplicity is better. And here's why. Here's why. The reason why is because the most important element in trading is loss and risk prevention. Loss, money management, loss prevention, risk prevention, portfolio security is the most important thing when it comes to trading. Let me explain. I know traders that are actually only correct on less, they're actually correct less than 50% of the time, and yet they make tons of money. How is that possible? How can I make money if less than 50% of my trades work? The reason is because they take care of their losses. Your gains are going to take care of themselves. Your gains will take care of themselves. You have to take care of your losses, or you'll end up becoming a bag holder. If you don't minimize your losses, your risk, then you will end up becoming a holder. You can turn from a trader to a holder really quick. And that happens so many times. That is probably the thing that gets traders out of the game the quickest, is because they don't prevent and manage their losses. So they just watch the puppy just plummet, and instead of getting out when they should have and taking a small loss, they end up with a massive loss and have to determine now, well, crap, do I just hold this now until, we're back to the bull market, so I could be sitting on this puppy for weeks, could be months, or am I now going to take a bigger loss and sell this, and I'm now instead of taking a 5% loss or a 10% loss, I'm now taking a 50% loss on this. Do you see the dilemma? And we're going to have an entire class dedicated to that, because it might even be two, dedicated literally to the psychology of trading and to loss prevention, money management. So that, I'm not saying that we are going to get less than 50% of our trades. We're actually going to do much better than that, because we're actually trading a known cycle, a known bull market cycle. But I just want to throw that out there for you so you guys have that head knowledge. All right, let's go ahead and get into candlesticks. For me, before you can touch any indicator, it is extremely important. Before you throw any other indicator on there, it is extremely important for you to be a price action expert. And we will use Japanese candlesticks. That's what these are called. These green and red bars, they're called Japanese candlesticks. And without getting into too much history, it was developed in the 17th century by the Japanese it was used for trading rice. Now we've come a long way since then, and there's much more to the story than that. However, that's the basics of it. The reason why I like Japanese candlesticks, because for me, I'm a picture guy, man. I'd rather look at pictures than read the book. And Japanese candlesticks gives you the entire story for a designated time frame in a single candle. About price, about what is happening with the price. Price action. Before you get it, every indicator out there comes from it, is based off of it. So why wouldn't you want to be an expert on price action first? I'm going to tell you right now, you can give me price action and volume and I can be successful. And there's things that I look for and other things. However, with just those things, I can be successful. Why? Because it is the data that you need. Price action is the data. What is price action? Price action is supply and demand. It's buyers and sellers. That's what price action is. It's the rising, the increasing, and the lowering and decreasing of price based on who's buying, who's selling, how much supply is there, how much demand is there. Those things dictate whether the price go up and down. Now, we have psychology behind that. You know, active people that are trading, most of them trade off of emotions. Dreams, visions, hopes, fears, greed, pie in the sky, fantasy world, the future 100 years from now. That is what dictates price. Why? Because it's people. It's people doing it. It's people trading it. However, we have now a new, it's not really new, it's just growing, and that is basically trades and funds using artificial intelligence and robots to do their trading for them. So there's many things from the past that no longer work quite as well because of artificial intelligence and robotic type computer-based algorithm type trading. So we also have that to deal with. There's that component as well. And some people call those things market manipulation. Call it whatever you want. It doesn't matter. But you have to at least be aware of it, especially in the crypto world. So let's go ahead and pull up our candlestick training, and let's focus. Let's focus. So this is basically the structure of the candles. We know it should be obvious to you that green indicates the price went up in some format, and the red indicates that price went down in some format. Now there's a little bit more to that story. So let's talk about first of all, each individual candle, like I mentioned before, represents a specific frame of time. So this singular candle could represent 1 minute. It could represent 1 day, 1 hour. It could represent 1 year, for crying out loud. It could represent a week. You get the point. Who picks that? You do. When you go into trading, you go into your charting, you get to select what time frame that is. So I need to make that clear. Every candle represents a time frame that you choose. So here's the body. Here's the body of the candle. The body of the candle is the price point between the open price and the closing price. So let's pretend this was an hourly candle. Well, basically this green one means at the hour that this opened, it opened right here at the bottom of this candle body. And it closed at the top. And because it's green, we know that because green means the price went up. It's generally bullish. So the bottom of the candle is the price that opened up for that hour, and this was the closing price for that hour. Now you notice we have these little stick things at the bottom and the top. Those are called wicks. I call them wicks because they're candles. Many people call them shadows. Some people call the bottom tails, whatever. I mean, whatever you want to call it. But for me, they're wicks. That's a lower wick and that's an upper wick. So why are they on there? Well, we know the body of the candle is the distance between the open and the close. However, that doesn't mean price didn't trade outside of that range for that, let's say this is an hour, for that hour. The wick here means price actually went down this low. So it opened here, and sometime during that hour, it traded down this low. However, it went back up, traded as high as this wick. However, it came back down, and by the time the hour was up, it closed here. So the entire portion represents the total range for that time frame. And in this case, we're talking about an hour. We're pretending that this represents an hour. So this is the total range for that time frame. And the body represents the distance between open and close. Now, on the red candle, that means price went down. So that means if you know the body is the distance between the open and the close, then where would the open be? Well, the open would be up here, and the close would be down here because price went down. So sometime during that hour, it opened here, went this high, and then went all the way down here, went this low. So a few buyers stepped back in, and it actually closed right here. So generally speaking, this would be a bullish candle. This would be a bearish candle. Now that's the basics, but you notice not all candles look exactly like that. However, the wicks and the bodies still mean the same thing. No matter what the candle looks like, if you understand this, you can understand how to read the candle. No matter how long the wick is, no matter how long the wick is, whether it has a wick or whatever, you can still interpret the candle and the price movement. Let's go down to this next picture here. By the way, these documents right here that I'm showing you on screen, they are literally loaded right there in our Elite course. It should be accessible to you somewhere nearby this video in a PDF or Word format. So you can actually print this stuff off and use it. You should be creating a notebook. I mean, you literally should have a trading journal, trading notebook. I want you to print this stuff out. I want you to write on it. I want you to write in there. I want you to get involved. I want you to get your hands dirty. I want you to know this stuff. I want you to watch this stuff over and over. This stuff, you have to know this. I know in order for you to trade, you got to know this. You got to know these basics. You got to know it. You got to want it. It's got to become a part of you. You can't be wondering what the candle means if you're trying to look for a trade. That's craziness. That's craziness. You have to know this stuff. That's why I'm spending this amount of time on it. So this is a little bit better picture. Again, kind of the same thing. You got lower shadows, that's the low. Higher shadows, that's the high. However, the body represents the distance between the open and the close. And that determines whether that is bearish or bullish or bearish. Did the buyers win? Buyers kind of went out here. Here, the sellers kind of went out. So that's pretty much how that works. All right, let's scroll down. I want to take a look. I told you not all candles look like that. And they don't. There are many types of bullish looking candles. There are many types of bearish looking candles. So here are basically some examples of other candles that look differently. So another thing I want to put out there, I told you that each candle represents a particular time frame. Even though we're talking about a candle being bullish or bearish, you cannot take a candlestick all by itself and make a decision. It must be looked at in addition to the other candles and the time frame, or other things like resistance and support, trends, those type of things before you make a decision. So even though I'm saying it's a bullish candle, that doesn't mean just because this type of a candle posts itself that's a signal for go. That's not what we're doing. An individual candle is a very, very short-term signal. You need many more. You have to have more input than just the candle to make a decision. So I need to be clear about that. You are using the price action of many candles during the time frame, along with volume, along with other things that we're going to talk about, to make trading decisions. However, I'm just trying to show you how to read the candle individually. So get that in your head. I'm not teaching you how to trade yet. I'm teaching you how to read the chart correctly, which is vital. All right, so here, look at this. There's no wicks. Look at this candle right here. There are no wicks. What does that mean? Well, that means it opened. It never went below its opening price. And it went up and up and up and up and up. And it might have dipped through here throughout the day. You know, up here, dipped, up here, but it closed at its high. So there's no wick above it either. That means as high as it went, that is where it closed. That is a very, very bullish candle. It's a full-bodied candle. Very bullish. Let's look at this next one. As a bullish candle, you can see it's got a wick below and a wick above. That means there was some extra selling at the bottom and there was some extra buying at the top. However, this is a nice gain for this time frame. Nice green, good thick body. That's called meat. When you ever hear me say meat, put meat on them bones, that's what I'm talking about. Look at this one. There ain't no meat on them bones. Then there's a reason, and we'll explain that in a minute. So this is a bullish candle. This bad boy. This is a bullish candle as well. I'm going to tell you why. There's no meat on the lower wick. So basically what happened is this candle opened right here at the lower part of the body of the green candle. And then sellers came in and they were selling this puppy. They were selling this puppy. Let's say this is an hourly candle. Well, sometime during that hour, it hit a point, a demand zone. It hit a demand zone, dude, and the buyers came in and they snatched up that discount. They snatched up that lower price. They liked that price and they came in with a fury and they bought and bought and bought, and it ended up closing above where it opened. And matter of fact, it closed at the high. So we have a nice long lower wick. That's a rejection. That stick right there, that shadow, that lower shadow, that tail, that lower wick, that is a rejection of the selling. The sellers were rejected, the buyers came in, and now you have this nice bullish candle. I like it. All right, this is kind of a spinning top. It's a little less bullish. Why? Because you got a long lower wick, a long upper wick, and the meat is kind of in the middle. That's kind of an indecisive candle. Indecision. So buyers did come in, sellers did come in, but it kind of met halfway in the middle. So that could be part of a continuation. It could be that, this thing's going to consolidate for a while. Buyers and sellers basically are agreed on the price at this point, and so on and so forth. I don't really like this guy being in the bullish candle section. Could it be bullish? Yes, but this could be very bearish. Those of you that are catching on already know why. Note the meat is at the bottom here, and we have this long upper wick. So the long upper wick means, so that means this puppy opened here at the very bottom of the body. It went all the way up here, and then boom, the buyers got rejected. The sellers came in. The sellers came in, man, and dropped this price all the way back down. It's still open. It's still closed above its open, so it's green. It's still closed above its open, so it's green. However, we have this spike. We have this pin bar up here. And that means there was some selling pressure. There was some selling pressure. So that's something to take note of, huh? The sellers stepped in. Man, there was a rejection of this price up here, this range. And the sellers came in. All right, down here in the bearish candles, it's exactly the opposite of what we just talked about. This is obviously a bearish candle. This puppy opened. I mean, sellers came in. Maybe it did go up a little, but at the end of the day, it closed at its low. And so if this was hourly, it opened here. At the end of the hour, it closed at its low. Right here, you have a rejection of buyers. You have a rejection of buyers. So it opened right here at the top of this red candle. That's where it opened. Because remember, if it's a red candle, the open is the top of that meat. The close is the bottom. So it opened here. Man, buyers came in. Yeah, woohoo. Yeah, it's a party. It's a party. Let's go. Let's go. But uh-oh, it hit a supply zone, and sellers came in and dropped that puppy all the way back down. It actually closed below its open. So you have a rejection of buying right here, and that is bearish. All right, right here, this is obviously a bearish candle. You have some upper wick, some lower wick, but that's a nice meaty body. It's a nice meaty candle, nice full-bodied candle. Not quite as full as this one. However, that shows that that trend or that movement is probably doing pretty good in the downside. Right here, you have another spinning top. spinning candle here. Right? And so this is basically, again, kind of indecisive, just like this one up here. You have a long lower upper wick, long lower wick, and the sellers and buyers kind of met somewhere in the middle. Basically, they've agreed on price for that period of time. So that could be, again, consolidation. It could signal that steam in a certain direction is running out, so on and so forth. You have to look at all the rest of the candles to decide that. So I don't really like this candle being in the bearish candle for the same reason I don't like this candle being in the bullish candle. Right here, we have the open right here at the very top. And then it traded all the way down here. So sellers were a powerhouse. But all of a sudden, it reached a demand zone. Buyer stepped in and took the price all the way back up. And it closed right there below the open. So we have a long lower wick here, a rejection of the sellers. A rejection of the sellers. Buyers came in, scooped up the discount, bought the dip, and it went back up. So for me, I'm not crazy about this being in the bearish because it depends on where it's at in and amongst the trend and in amongst the rest of the chart. But I just wanted you to be aware of it. Pin bar candles. All right. Dojis. Note on the dojis, there are no bodies. There's no bodies. There are no candle bodies. All you have is wicks and a dash. So that dash means what? It means it closed where it opened. Whatever price it opened at, that's where it closed at on the day. That's for all of these. So this one is indecisive, isn't it? It opened, went up, went down, or went down and went up, but closed right there in the middle. That's indecision. Here's another indecision with a bigger price range. It opened, went up, went down, or went down, went up, and then it closed right there in the middle. These are indecisive. Indecisive. Without looking at the chart and without looking at these in the midst of other candles, it's very hard to say and determine on their own accord what's going to happen. This bad boy right here shows that it opened and closed in the same spot, that buyers did come in, however, they were rejected. The buyers were rejected, and this bad boy came back down and closed down here. That could be bearish in nature. And then the opposite here. It opened, ooh, sellers came in. Yeah, they sold that bad boy, and then all of a sudden buyers came in, bought the discount, and it closed back up here. So that could be bullish. But the point of this was for you to see, the point of this picture was for you to see the different candles so that no matter what candle you look like, you should be able to determine the price action for that time frame. Spend some time in trading. You look at weird candles, say, whoa, that was a big, you're going to see candles with massive wicks. And you're going to be like, wow, what happened? Now you're going to know. Oh, wow, sellers were rejected, or buyers, man, buyers got pounded here. You're going to be able to see and talk these candles because you understand these patterns. All right, here's a little bit of, more look from very bullish. Yeah, it's still bullish, a little bit of selling, but that's a nice meaty body. All right, a little less bullish, a little bit of rejection here. To kind of a neutral bullish, to dead neutral, indecisive. Buyers and sellers meeting in the middle. Buyers and sellers agreeing on price, at least for that time frame. And then we can start over here from very bearish. I mean, that thing opened and closed at its low. To a little less bearish, but still that's pretty meaty. To a rejection of the sellers. So this would be a little less bearish than that one because we did have a rejection of selling. Long lower wick. To still bearish, but kind of neutral because it's right in the middle with upper wick, lower wick. To very neutral again in the middle. I just wanted to see you the progression and how that looks from very bullish to less bullish. So now when you look at a candle, you can be like, oh yeah, that is a bullish candle. Well, that one could be bullish, but depends on how it looks in the chart. All right, now that we've talked about that, let me get a drink of water. I want to talk about, you can get Japanese candlestick books and, oh my goodness, and just get lost in the different formations of different candle structures and literally have your mind blown. We don't want to do that. I want to cut through the crap and give you the important stuff, the stuff that you really need to know that are very important, especially when it gets into trading and the stuff that I care about, the stuff that I look at. We want to keep this as simple as possible. and not throw in 1,000 different things and make it impossible for you and difficult for you to actually make decisions. So there are two candle structures that I do want you to know for the future that are important for different reasons. All right, they are bullish and bearish engulfing. Bullish and bearish engulfing candles. And so what I want to show you here is, let's say we have a downtrend, or for a certain period of time, the market is moving downwards. Here we have a bearish candle. Immediately after, we have a bullish candle. And note how the body of the bullish candle engulfs is larger than the body of the bearish. It doesn't have to, some people get particular and say, well, no, the body of the bullish candle must encompass the entire candle, including the wicks of the bearish candle. That's not necessarily true. That is found far less in charting than this. So for this, the point of what my system is, the only thing you need to see is that the meat of the bullish candle engulfs the body of the bearish candle. And as you can see, that signals or shows you that something has changed. Something has changed. This was some selling, but all of a sudden buyers have really stepped in. And as you can see, moving on, we now have what looks like a reversal. So this can signal many times a reversal of that current price action, even if only for a short term. It depends on the timeline that you're looking at. Depends on the timeline that you're looking at. This can signal a reversal. I like these. These are most effective when you're looking at something that is pulling back. Well, this could be a pullback. So you could be in a bull market and this is the pullback and you're looking for, hey, is this pullback over? All of a sudden you get one of these. This could signal, you still need to look at other things, but this could signal that, hey, this pullback may be over here. And you can use that in trading. And there's a little example here. I'm not going to get too into detail. However, note, based on this candle right here, entering a trade. We're not going to talk about entering a trade here. I'm going to show you that later. You could put your stop loss below the wick of this engulfing candle because you're playing this move. You don't have to write this down. We're going to get into this when we get the strategy. I just want to show you the effectiveness of some of these setups. And this is the bullish engulfing setup. I could put my stop loss right here because obviously if price reverses and comes back down, it nullifies this candle by what? By going down past the wick of this candle. So I don't want to be holding this. Below this wick, I don't want to be holding that trade because my trade was for this to come out, reverse, and head up. So I don't want to be stuck holding that. So I would put my stop right here or my mental stop. I would get out of this trade because it didn't work and it's going against me. Everybody got that? The opposite is here. So let's say now we're trending up. We got the nice uptrend, and you could use this just to determine whether a pullback is coming or whether there's a market reversal, whether that be short-term, long-term, whatever the case might be. Either way, we're a bull market, we're going up, we got a nice meaty candle. Then the next candle is a bearish engulfing candle. The body of the bearish candle completely engulfs the body of the bullish candle, signifying, hello, sellers, even if just temporarily, sellers have taken over. If you were going to short this, you would want to put your stop right on the other side of this wick. There's no reason to go way lower than that because if this decides to come, this price comes up here and then all of a sudden it trades past this, well, that nullifies the engulfing candle. That nullifies that. So you don't want to be stuck holding this if this comes up here, starts to drop, and then all of a sudden it runs. You want to be out. You don't want to be stuck holding a big bag. However, because this is bearish engulfing, if you got in this trade, we're not talking about the entry right now, you could ride this either a pullback or you could ride this trend reversal. You could ride this trend reversal. On the engulfing, I like for the engulfing candle to be at least 20% bigger than the candle that it engulfs. So if it barely engulfed it, you know, it's going to be a little less reliable. I like for the candle body to be at least 20% bigger than the candle that it engulfs. That's just my preference because it gives me a little bit more validation. It gives me a little bit more validation. I don't like there to be long wicks on my bullish engulfing candle as well. I like for it to be pretty sturdy, just like this. Let's see. These work the best as reversals or out of consolidation. These patterns work best on reversals. Like I told you, price is coming down, then it shows it's reversing. Price is coming up, then it shows it's reversing. Or as a signal that it's coming out of a consolidation. Love it. So that's engulfing. Next, last. Pin bars. Those long wicks. You guys have seen me tweet about it a lot. I'm like, man, long lower wicks. Buyers smashed the sellers. Long lower wicks. Buyers came in and smashed. Sellers got rejected. Long lower wicks. Here, buyers got rejected. We have a huge upper wick, huge upper shadow. Buyers got smashed. These are called pin bar candles. Also called spike tops. This would be a spike bottom. Spike tops, spike bottoms. They also signal that there is a rejection of price. I love this one as well. You'll see these a lot. But for this example, you got a bullish candle. The next candle, you get this nice bearish pin bar showing, hey, buyers came in, man. They took the price up here, and then all of a sudden, slam! During, let's say this is an hourly candle, slam! Sellers came in and dropped that price, and it actually closed below its open. That would be, even for the short term, that would be bearish. And as you can see on this next candle, you got a, wow, confirmation on a bearish candle right here. Here we have the opposite. Sellers doing well here. All of a sudden, sellers doing well here. And then, bam, buyers came in, bought these discounts, and actually closed this above the open. So we have this long lower wick. Sellers were rejected. That price was rejected. Buyer stepped in, and look at the next candle. Bullish, baby, bullish. And off it went. So those are things I want you to keep in mind. You understand now how to read candles, price action on candles, where its open is at, where its low is at, what color it should be, what color it is. Then it tells you where the open is, where the close is, what an upper wick means, what a lower wick means. That means high price or low price. Also, the bullish and bearish engulfing, what that looks like, and also the bearish and bullish pin bars, bullish and bearish pin bars. All right, so that should get you going. Let's go back and take a look. Remember, those documents are there for you. Let's get back into TradingView and see some of these. Let's go to, let me get rid of some of this. All right, so basically this is pretty close to a bullish engulfing candle, just one example. I'm gonna let you guys kind of do this kind of stuff on your own. Here's one. This is, it still engulfs it. Not completely, but it's kind of close at the bottom. Here's one right here. This guy right here, this would be an engulfer. And then here's some pin bar candles right here. This is a bearish pin bar candle. You can see this long lower wick. Look at these wicks on these, showing what? We have, you can see the trend is up. Look at this movement. You can see the trend is up. This is Bitcoin daily. Each candle representing a day. A lot of these bullish pin bar candles. Why? Because sellers were rejected off of these. Sellers were rejected. Even though they're red, sellers were rejected. Look at this right here. 27,000, look to the right, 27,316 here. 27,000. And we had this puppy move to 41,000. 41,000. This told you the trend was intact. It was good to go. Let's see. We have this wick. All of these wicks show that this trend is strong. That sellers, every time sellers come in, they get rejected. And the price continues to go up. We had a little bit of price rejection here, and price came down a little bit off of that and consolidated before moving higher. Let's pull up some. Look at here. I want to show you So this right here, oh my goodness, this was the pump and dump. I don't know if you guys remember this on, let's see, 30 January to 1 February. It was a pump group that on 1 February was supposed to pump XRP, when in fact, we have validation and proven fact that they were getting in here. They were actually buying here. How do we know that? Because on the day they were supposed to pump it, you got to pump to here, but then it just got plastered. It just got plastered on the daily. If you were to break this down into hourly, you would see this. Let's take a look at it on the hourly. There it is. Let's open this up. So here's 1 February time frame. Look at this. Look at this destruction. Absolute destruction. On the daily, this shows up as a massive upper wick, showing the amount, the drastic amount of sellers that stepped in and dropped this bad boy down. So I use those a lot on different price points, on different patterns. You're going to see those when we start talking about trading, when we start talking about entering trades. But even looking at this chart, look at all the different candles. Spend some time going through a few of them saying, okay, what is the open? What is the close? What is the high? What is the low? What about this candle? What is the open? What is the close? What is the high? What is the low? Spend some time looking at different candles. Here's one we kind of talked about. Indecisive candles, indecision candles, where they kind of met in the middle almost. So go through, take the papers that I gave you, the documents that I gave you, go through these charts, start looking, reading, finding some of these patterns, find some of these bullish engulfing patterns, find some of these spike top, spike bottom candles, and start reading, start looking at those. All right, I think we've gone on long enough for this session. I'm going to be, the next one should be available to you already, but I hope you enjoyed this video. We're going to get in depth in quite a bit. I love that you guys are here. Hopefully this class made a lot of sense. If you do have any questions on the class in particular, don't hesitate to email me, reach out, email me. Make sure that you're asking me questions that pertain to the class. Don't ask me about things we haven't covered yet. I will be covering everything, so don't worry about that. But if you have particular questions here, don't be afraid to reach out and send me an email. All right, guys. Love you. Until next time, here comes the boom.